Welcome to Binary Options 60-Second Strategy. This topic is brought to you by binaryoptions.net.au. So what is binary option? Binary options traders use a 60-second strategy to trade forecast price direction after just 60 seconds. By using 1-minute bars on a short-term price chart along with a high probability setup, traders can accurately place either a call or a put trade with the view that the binary option trade will expire in the money. As with all financial products traded on any exchange, there are a number of specifications that binary options traders must recognize if their strategy involves trading for profit. For a 60-second strategy, the first specification is a 60-second expiry. That is, the option expires exactly 60 seconds from the time in which the option trade was placed. The next specification is expiry style. As opposed to American style expiry, which means the option can be exercised at any given time up until expiry, binary options specifies a European style expiry. This means the option can only be exercised at the traded expiry date and time. Traders of binary options can either place a call or a put trade. A trader with the expectation that the market will rise places a call trade. A trader with the expectation that the market will fall places a put trade. Either trade, if successful, will expire in the money, returning the trader a profit. An out-of-the-money trade carries a loss. For binary options, one of the most important specifications is the payout or profit percentage. The payout percentage is the amount the trade is capable of generating if the final outcome is positive upon expiry and the trade direction, either a call or put, is accurate. The percentage amount may vary between broker to broker. However, on a 60-second strategy, the payout percentage is generally between 60 and 75%. So, for example, let's say a trade is placed with $100 and the winning stake that is associated with the position is 70%. If the trade closes in the trader's favor, in the money, then the payout is $100 plus 70% of that $100, which is $170. In this case, the payout for the trade would be $170. The maximum payout for a trade will be clearly visible on the broker's platform. Binary options have no spreads or commissions and are cash settled. In the case of binary options, position limits do apply. Positions are limited to a maximum of 1,500,000 per side of the market. So we know the product specifications for a 60-second strategy. Now, how do we profit using it? Firstly, we need to trade in the money. That is, we need to correctly identify the trade direction at expiry. The amount of return generated by the accurate trade will be between 60 and 75%, depending on your broker. Finally, trading must be above break-even levels. A trader must win at least 6 out of 10 trades. To learn more about break-even calculations, see BO104 break-even ratios. What's next? We select the market. Binary options traders can trade Forex, index, and commodity markets. Individual stocks can also be traded with success. Trading hours must also be confirmed. See BO113 Trading Hours for more information. So, we have briefly discussed the options of taking a call or a put trade. Let's take it a step further. Because binary option traders are not concerned with the size of the market movement, but rather market direction, when a trade has the expectation that the market will rise, they place a call trade knowing the potential return it offers before the purchase is made. When there is an expectation that the market will fall, a trader places a put trade. Either trade, if successful, will expire in the money, returning the trader a profit. An out-of-the-money trade carries a loss. For a very short-term strategy like a 60-second strategy, to profit, a trader must use a high probability setup. That is, using a setup in which the trader feels a trade or trade direction has a very good chance of success. To a liberal trader, a high probability trade is one which is successful 2 out of 3 times. To a conservative trader, the success rate is 4 out of 5 times. For a binary options trader to be high probability, a trader will look at a security's price history, considering swing highs and swing lows, trend lines, including support and resistance levels. They will also use price framing techniques normally on a short-term price chart to identify these key price action levels and use trend channeling tools such as Andrew's Pitchfork to give the trade the very best chance of success. Price framing with a channeling tool such as Andrew's Pitchfork is very successful for high probability trading. Andrew's Pitchfork consists of 3 parallel lines drawn from 3 consecutive major peaks or troughs in either an uptrending or downtrending market. The channels themselves assist in identifying support and resistance levels in a trending market, as well as signaling price breakout points. Now we will turn our attention to a chart so binary traders can see the success of using a channeling tool such as Andrew's Pitchfork to trade for profit. The pitchfork can be drawn by hand or using a charting package, which will automatically identify key points within the chart and overlay the tool for you ready to use. Today I'm using a price chart of the US dollar against the Japanese yen. Because we are trading a 60-second strategy, it is essential to use a 1-minute price chart with a look-back period of between 60 and 120 minutes. In our example, the trend is an uptrend. Our pivot points, or swing highs and lows, are identified as the first swing low, followed by the first swing high and the intermediate swing low. In an uptrend, the pitchfork will always point upwards. The center median line, or handle, shows the strength of the trend. In a strong uptrend, price tends to be above the median line, while in a strong downtrend, price will be below the median line. Andrews hypothesized that price action would gravitate towards the median line 80% of the time. A lower trigger line is also drawn from swing lows. Whenever a momentum cutoff occurs, the trigger line can be used as a confirmation of the change in trend. One popular function of Andrew's Pitchfork is assisting traders in identifying support and resistance levels. In an uptrend, the median line functions as a level of resistance, while the lower channel operates as a level of support. Clean breaks, price retracements, and trend reversals can all be identified from the one chart. For the charted example, by identifying just 3 pivot points which form the pitchfork and drawing just one trigger line, we have flagged a number of key call and put high probability trading opportunities. As a 60-second strategy binary option trader who is not concerned with the size of the move but rather the direction, we will look for breaks in support or resistance levels. Clean breaks which signal trend reversals and lower or upper trigger line breaches to act as call, buy, and put, sell trading signals. In the first instance, a breach of the level of support is identified midway through the series. This initial breach is an ideal 60-second call trade opportunity. Each subsequent break in this level can also be considered a trade signal. Once price retraces and breaks clean from the pitchfork channels, price is expected to fall further, signaling 2 ideal put trades. 1. Upon the clean breakout from the lower support level, and 2. On the breach below the lower trigger line. Price falling below the lower trigger line signals an anticipated trend reversal. For more information about this topic and more binary option trading strategies, please visit binaryoptions.net.au.